So let's get straight into it. We're into the second week of our Future Fund Stocks series. I've asked our guests to come along with a stock they buy today to put in the bottom drawer to help fund your kids' or grandkids' education costs, the cost of rearing your children. It's a topic that's being played out in my household at the moment with a daughter and a daughter-in-law, both due to give birth next month, and they're asking my advice, and I said, well, I'll give you my advice, not my money. You can look after them yourselves. So Howard, what's a stock that you'd put into a portfolio to help pay for kids?
Yeah, I mean, I've got this particular stock in my portfolio, but in my case, it's probably not for kids. My kids are grown up long ago. I've got grandchildren who all bar one grown up too. But the stock is CSL, and there are a few reasons for it. I mean, if you look at what CSL does, most of their business is collecting plasma. Biggest place in the world that they collect it from is the US, but they collect plasma around the world and turning that plasma into a whole variety of different products, some very high margin, some not so high margin, that are used to help people health problems. Now, the baby boomers in all of their main markets, Europe, the United States, Australia, are between 57 and 75 years old today. That's the definition of baby boomers born between 46 and 64. Now, 57 to 75-year-olds are starting to use more and more and more of the products as they age. And in 10 years' time, that entire cohort is likely to be using at least twice as many of the products that they were using at the ages today. Then on top of that, CSL is developing a huge number of additional products that come out largely from the plasma source, but some of them from other sources, that in R&D, in trials, in phase 1, phase 2, phase 3. So there'll be a large number of extra products coming through over time as well. So earnings per share will at least double simply from the baby boomers aging. There will then be a further increase in 10 years in their income from the new products that come in. And at the moment, as we can see from that share price graph, CSL's share price has kindly dropped reasonably nicely from close to $315 odd down to 286. So you're getting a great company that's got almost certain growth over the next 10 years that you'd be putting away in the bottom drawer. And at the same time, you're able to buy it at a reasonably decent price. I wouldn't call it a screaming bargain, but it's a decent price. And if you're putting it away for 10 years, you'd probably be very happy in 10 years' time.
Okay, a good suggestion. Gary, what stock would you choose for a portfolio that you're sort of your family's future fund paying for kids portfolio?
It's David. So I've recently gone through this exercise of actually setting up an account for my girls, and putting some money as a starting thing for I guess, to get going. So I think it's actually too risky to actually pick a single stock.
Right.
I like the sort of that sort of broader sort of, I guess, go for like a sort of a listed sort of fund sort of style. So one that I really like is Argo. I think they sort of keep it pretty simple. Sort of pick sort of 70 sort of stocks in that sort of top 200 sort of sphere. There's normally a mixture of sort of dividends and growth in there. So you get some good dividends coming in there, so that income's growing, so you can reinvest it in the future, and just a broad-based appeal, so you don't have any one risk in one stock there, which potentially could have some risk there. So this, I mean, on the Aussie market there, we've had like Milton, which is unfortunately just got taken out by Soul Patts. So we're actually missing. We don't have too many of these sort of style investments out there. There's a few LICs there in specialist areas, but in terms of sort of keeping it pretty broad and pretty simple, Argo is the one that probably appeals to me.
Okay, that's a really good suggestion. All right, thank you for that, gents.